Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the futures, the Dow, SPY, and VIX, and Apple. And first up, you can see futures here have been pretty flat tonight, just slightly down. We've got NASDAQ trying to climb back and turn green, and you do have the VIX over here that is slightly up. It's up nearly 2%. Okay, so if we look here at the Dow Jones Industrial Average, you can see here it's trying to heat up. It's got to get RSI back above 50. It's at 47 right now. It had a nice multi-day run last week. Yeah, you could see here, I just put all these circles on here. But yeah, it needs to, what needs to happen is right now that the candles are wedged between 100-day simple moving average at 25469 resistance and 200-day simple moving average at 25,124 support. So one of those two levels is going to break next week, either this red line or the gold line. A break above the gold line is going to signal upside potential, and that's going to put that 50-day simple moving average at 25881 back on deck. Now, if it were to break below the red line and the 200-day simple moving average, it could come down here and fill this gap between Tuesday and Wednesday. A drop down to 24,900 would fill that gap. There is a potential, if it came down to 24,900, to retest that 300-day simple moving average in the 24,600 range. That's what it bounced off of back there on the 29th. Now you can see down here on MACD there was a bullish crossover on Friday on the 1226 and 9, and the 813 and 5 had already crossed over. So this is a signal of the possible start of an uptrend. It just has to turn the middle Bollinger Band, currently at 25,316, into support. Fail to turn that level into support, and it will signal continuation of this downtrend. Okay, if we look at the Dow Jones Industrial Average on the 15-minute chart, you can see the gap here between the 30th and the 31st, and a drop down to 24,900 would fill the gap. Okay, so it's pretty much in the sideways channel. It did pop above the channel here briefly on the second, but what it's going to do is break this cluster of candles here right around 25,350 or so. It's going to have to break back above that level, and then that's going to signal that it's ready to head higher. Also has to get above the 50 simple moving average at 25,000, basically 300, this green line here. Get above that level, that should signal that it's trying to push higher. To the downside, if it were to break below this 100 simple moving average at 25,131, that would signal downside risk. It might come down to the 200 simple moving average, test the top of the gap down there at 24,972 and possibly fill the gap. Now, if we look at SPY, the S&P 500 ETF here, you can see it made a nice move last week heading into Thursday, and then Friday it pulled back and it formed the red candle. Now notice the red candle closed more than the halfway point of the previous white candle. That did form the bearish dark cloud cover reversal pattern, and so this is a strong reversal pattern. It will need to confirm it. It's still closed above EMA's 4 and 8 here. It basically needs to hold 271 support. If that support level broke, it could come down here and fill a gap. There's also a gap here between Tuesday and Wednesday, and a drop down back down to that 300-day simple moving average, the blue line at 26779. That would fill the gap. And so that's the risk right now, is a gap fill. To the upside, it needs to break the middle Bollinger Band, the dotted purple line, and the 200-day simple moving average. It needs to basically break above this 274 level and turn it into support. If it stays below 274.30, that's going to signal downside risk. It's in a downtrend right now. The downtrend started on this red candle, the close below the dotted purple line, and since then it's been heading lower. Once the dotted purple line turns back into support, that's the 20-day simple moving average, a new uptrend can begin, and it could possibly retrace back up to that 100-day simple moving average. Now, if you look at the 15-minute chart, you can see here, it had been consolidating in this zone for the last few days. It's going to need to break above 273, and if it were to drop below 270, that's going to signal downside risk. Right now it's in between the support and the resistance and the sideways channel basically, and it's going to have to turn this 50 simple moving average at 272 into support to head higher. If it's trading below 272, that's going to signal downside risk. Now if it does drop below 270, 270, gets in the 270s, that's going to be your signal. Okay, yeah, SPY is heading lower. And if it were to drop below 269, that's the bottom moving average on this 15-minute chart. That's when it could really get heading lower and possibly fill the gap. You can see the top of the gap is down here around 268. Now, keep in mind, a downward gap fill many times is a catalyst for a technical bounce. Okay, if we look at VXX here, the S&P 500 VIX short term ETN is bouncing. Okay, so it pulled back while it was in an uptrend. You can see it's had really good volume lately. It pulled back to the middle Bollinger Band and the 200 and 300 day simple moving averages here, right around that 35.50 support zone. As long as that level holds, that's the reload zone. If it were to drop below this major support zone, that would signal downside risk. It could come all the way back down to 31, test this 50 and 100 day simple moving averages. Now to the upside, it needs to break above EMA's 4 and 8. Okay, that's the pink and lime lines, basically at 37.21. If it gets above that 37.20 level, that should be the signal, okay, it's pushing higher. Okay, fail to break those levels and they remain resistance, that will signal downside risk. Either the EMA's 4 and 8 is going to break, or the 200, 300, and middle Bollinger Band, the 20-day simple moving average. One of those levels are going to break, either support or resistance. It's wedged between the two. It's not likely just to go sideways here. It could, but it's more unlikely it's going to break above resistance or below support. Trading in the 35s, that's going to signal downside risk. If it breaks up above and starts trading in the 37s, that's going to signal upside potential. Now, if you look at the 15-minute chart, you can see here it has this double bottom kind of look with the 23rd. It came down on the 23rd, hit 35.25 and bounced and had a nice run. Came up here, made a double top type of pattern, and then it came all the way back down, hit 35.25, and that's what it bounced off of. Now it's hitting some resistance here in this zone. You can see this has been a key resistance zone. It's lined up with the 100 simple moving average at 37.83, basically that 38 level. If it can get above 38 and then get above the 200 simple moving average at 38.36, that's the red line, that's when it could really get moving higher. It has to get above the top moving average in the 15-minute chart, and that'll signal upside potential. Right now it's bouncing, it's trying to bounce. It did break down into the close. It has to get back above that 50 simple moving average at 36.91. If that remains resistance, that's going to signal more downside risk. It could come back down in that 35s and test that 35.25 support zone. Okay, let's look at Apple here. So yeah, Apple had that big drop on Friday, closed down over 6%. It never recovered. It kept trying to, and it didn't really recover. It's been having a hard time getting above 50 on RSI. Keep an eye on it. If it comes down here and hits 30, I'm sure people will be buying hand over fist. So yeah, last time it bounced off of this green line. That was the pullback back here in June, and so yeah, that's down there. In the mid 30s, and yeah, down here on Fasto, it's all the way down at 10.9, so it's at very oversold levels. It usually doesn't stay below Fasto for an extended period of time, but as you can see here, when it gets below 20 on Fasto, people buy it, bounces, but it could have the red white kind of thing going on, where it just goes kind of sideways. Right now on the chart, it's hitting a very, very key support zone. It's hitting the 100-day simple moving average at 208.38. Okay, that's the gold line here, 208.38. It has to hold this level. If this level were to break, it did close below, and that does signal downside risk. It has a potential to drop down here and test the 200 support zone. You can see right now it's holding this resistance level from back here in the beginning of August. That's turning into support. It's going to be real important it stays above 207. If it breaks below, it gets below this 205 level, the next big support's going to be down here at about 201, and then it really could come down here. You have a gap between high of day on this candle and low of day on this candle, and so that is the downside risk, is you get a pullback down to the 200-day simple moving average at 191.58 and fill that gap from back here between July and the start of August. Now, if it holds that 100-day simple moving average and can stay above 208, then the upside potential would be working back to the EMA4 at 214.22 and the bottom of the gap. There's a gap up. There's an upward gap between low of day on Thursday and high of day on Friday. And so if it bounces and it gets heading higher, what you want to see is a break above the bottom of the gap around 214 and then a gap fill. A run up to 217 would fill the gap. Okay, so it's going to work one of two ways. It's either going to come up and fill this gap, or it's going to come down here and likely test that 200 support zone. Okay, Apple, did form the bear stop loss, and basically it triggered a stop loss. It had a buy signal, and it dropped so hard that it broke the stop loss levels. And so so the chart has broken down, and so so now we're going to have to look and see if it can find support. You can see on Friday there were buyers. It came down here in this 205 to 50 or so, 206, basically 206 to 208 support zone, and people were loading off of support. Look at the big volume spike, and it it has the volume. Okay, but it has to break above resistance. It has to get above 208. If it starts trading above 208, that'll be a good sign that they're trying to bounce it. And then you're looking for it to work its way back up to the 50 simple moving average that's currently at 213. Now, if it drops back below the middle Bollinger Band at 206.84, that's going to signal downside risk. It has to hold this 206 level. If it starts trading back in the 205s, it's likely to come down, test that 200 level. So it's going to be real important that it stays above 207 and then breaks 208 next week. That should be a nice run, at least up to 210 and then possibly back up to 213. You can see the gap. The bottom of the gap is right here about 213.50, and then the top of the gap is up here just below 217, this red line. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.